Alright, good morning, good day. This is the African Crypto Warlord. I hope you guys are doing well. We'll be looking into BTC today because apparently using the word trap is getting quite trendy. Alright, so just to make it simple for if you're trading the day, what am I looking at? There's no trap, there's just a range. So we have a higher term time frame, which is keeping price action steady over here. We're looking for some expansion in volatility and a new trend to break out. Alright, given that the PC is up, I would expect failures below the orange line. Furthermore, failures below this thing, the red line. So we just got the new 19-minute print. And that is contraction to the downside, so it's going to push it up into this orange line. And the general idea then being any failures below the orange line. Furthermore, that thing that's just turned red, you're going to go back to the mean and this point of liquidity sitting at 24,355. So that target was very well set. This is just another way to see it when the data crosses over. That's the timing aspect. You'll see that the wicks, when these lines cross, there's wicks that come back into them. So if it's pumping, it wants the wick down, so you'll know. You'll have a little bit easier time understanding what's going on. We're looking for returns also to start expanding in the middle here. If it's been red for a long time and it wants to go green, well then it wants to go green. So let's see if the 90-minute has the higher term time frames to pick it up out of 24,737 will be the daily to the Sunday range, and 24,336. Alright, so that's your range. Now we're going to go down the 21-day. What can we see? Higher term time frames. We've come in and we've hit a tighter distribution institutional level, and that's pretty much what's keeping us here for the weekend. So what I would start to say is bear trap or bull trap. If it opens and closes below the orange band for Monday, then we want to come down and test its institutional level, furthermore the institutional mean. Okay, so these are the levels we'll be looking at for. Any closes above 24,600, let's say, you can look for continuation to the upside, and any closes below, you can look for some continuation to this liquidity zone at 20 grand 181. So they seem to be lifting themselves. Okay, so that's a 21-day just on the simple narratives or the simple side of things. Now what you got to look for is, here's where you get the trap, if you were to say there's a trap. The general idea being is it's just wanting to break out of its tighter institutional level to get to its higher institutional level. The top side of that level is 38,420. The mean currently is 27,122. So this is the inside range, and as we can see, there's to the T, right? It failed it. So the general idea being is you need to look for positive drift or expansion to the upside over the coming days to make sure that the 21-day closes above that. Then you can get some cool continuation into the mean. So that's the 14-day. Now there's a little bit of a that was the 21-day. There's a little bit of a range on the 14-day here as well. This is a level that's just crossed. This could take some time to get to. I don't really validate too much on the 14-day. I just like to have its wide ranges. Now we to the Laplace distribution cone. Laplace distribution cone printed on the 26th of March. This is a longer term outlook, and its mean reversion play is at 44 grand 200. And what can we see? How I look at this is any closes below the third level down is still bearish. Okay, well, in the sense if it tests it and fails it, it's still bearish. If it comes in and bounces off of it and then continues through, like if it kept its range and bounced from here through, that's a bullish thing, and you go look for number 3. Okay, to the upside. So this is the general test. If there was to be a flush to any numbers higher than this, I'd be looking at 28k 600. All right, now we want to go see the simple side of institutional levels through this, and we can see that we're on the outside of it. So what's the rule? Any closes above, you look for continuation to the next line. Any closes below, you look for continuation to the next line. We said that there were going to be bull divs building here because of positive drift. Okay, so that level has already expired. What we can see on the higher term level though is that we have expansion of volatility catching a trend into the mean. Alright, so this is on the 7-day. If it closes candles above 24,495, you can look for this hidden bull div to have its last little leg of run up, and that's quite a high continuation number if the volatility backs it. You get up to 32,600. Alright, red flashes on, so be suspect. And we have some positive drift on the 5-day, so this is very, very cool to see. What this generally means is, if I was to start scalping anything below 5-day, I would, or trading anything below or scalping, I would be scalping short and covering quick. Alright, so sell short, for me it would be like 2 or 4 minutes max, and then I'd enter long. Short can dump up, but I'm stacking coins. Why is that? Because there's positive drift, which means that a lot of the sell orders to the upside are going to get eaten up, and a lot of it's a bull market, you could say, right? But you still need to wait for RO to confirm through. But this is looking good. So this is what happens when volatility is contracting, and it's negatively correlated to price action. Price action drifts up. All right. So you have the 5-day looking quite healthy. Let's make sure it closes above any levels. So the 5-day will start to fail at 23,197. Okay, you trap it in there and you can bring it down. You can flip this volatility signature. There is a level at $18,894 if that does occur. If it fails a mean reversion on RO, as we already have an outlier, so it's a little bit overextended, but it has the positive drift to run that outlier completely to the upside. Alright, 3-day flash, looking for mean reversion. Initially that was pretty cool. This is what happens when your indicators line up, and a nice thing to witness. So 2 institutional levels, the red line coming in, trying to break through the mean, and it got denied. Why? You had a cross happen over here and a mean reversion play shortly after with a big candle. So it crossed and it would have been sitting where this kink is. So they just needed to close it above the JMA, which was a hard job, but they did, based it off of the mean, and they got it through. So if it does start to fail this weekend, I would look for, as we've already pointed out, some of these levels, 23,655 and not this one yet, 24,048. Okay, this region over here. If they keep it above there, I suppose you could have a mean reversion play to the upside on a 3-day contraction and volatility, whilst negatively correlated. So that's the play that's trying to happen now. If that does pull through, then this stops being a doji in the top right. This is on the daily. This line and what I'm seeing here is why your stochastic or your RSI or whatever momentum tool you're using hasn't hit. Is because the volatility hasn't matched the direction. That's why it's a doji, because it's saying, one is saying dump and one is saying pump, and then you have a doji. So you want to be on the right side of the algos. Okay, so it looks like the 24-hour will be something to wait on, and we'll go have a look at the 12-hour. 12-hour has a Bear Div. That's just because this one's closing below there, and it sort of does have positive drift on the 12-hour. Suppose that's what's kicking it up in that section. The 6-hour we'll have a look at with a Bear Div. So the Bear Div becomes true if BTC starts to close below the orange line where it's at now. So we'll say 24,581. Okay, and you look for expansion from here. So there is currently contraction, was positively correlated, so it's still sideways, but it looks like it could expand up and break the Bear Div. We'll wait for that. So what's the 3-hour saying? Is there a level here for the 3-hour to base off of to save that? So you could look for a deep run on the RO. So if it fails below this JMA here at 24,623, you can look for continuation to the mean at 24,389. Target's already been called. Furthermore, I'll just say down here at 23,943. Okay, so contraction positively correlated, that keeps it below this line, and that helps this mean revert to the downside and change the trend. So the 3-hour is something to look out for. So I'll look for this intraday, this level down here, and 90-minute. When this crosses, you're looking for 24352 with some contraction, which is keeping it up, and we'll wait for expansion and volatility. But this is your intraday range. If it starts to fail below the JMA, my probabilities are higher to the downside. If it starts to close above 2458, my tolerance is to the upside, and range, as we've already pointed out. So this is what we're looking at, and we've just started printing. This is a random candle, so I think if the 45 can load for me, there is a bear div. Looking for a new trend here. Let's see how long this takes. What's happening, baby? Okay, so something is positively correlated. Returns are down. Come on. Losing its trend. Both are positive. So this is a pump. Oh, there you go. That's why it's coming down. And you have a new trend. So sideways here on the 45 minute. So I think another 3 hours worth of resolution. And we will have continuation in the new trend. Being, this is a level for Bull Div, 24394. Target's been called. If it holds above there, look for it to test 2472. If it fails here, look for it to test any one of these levels, 2467, and I'll say down here, which would match up with the previous target, is 23937. Alright, if this was helpful, please do smash the blowhole button.